Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Friday, the 24th of September, and starting off with Audioboom, where it looks as though we've got our breakout after the bear trap that we had there just below the £8 level, rather. Here we're sort of 2-3 days into a breakout above that July resistance line around the £10 level, and above £10, looking for £14. Perhaps as soon as the end of next month. But the highlight here, really, that bear trap that we had after the departure or the rejection of AAA. On to a stock which is looking very healthy at the moment. I think from memory, from somebody on Twitter, it's UBS have taken 9% in the stock, but don't quote me on that. I might have got it wrong. Here we've already had the technical breakout. We broke that resistance line there from May around 1.3 pence in the middle of July, and obviously the shares had a good run immediately after that. Came back, I suppose, to the breakout level, which happens quite a lot, in fact, down to 1.3 again on the floor of that rising trend channel from September last year. But hopefully now we can, above 1.3, we can now retest not only 2 pence, but also maybe head up towards 2.6 for the end of November, something like that. If you're cautious on the shares, maybe you'd wait for a break of that resistance line there and the 50-day moving average around, 1.6 pence. But let's call it 1.6 pence over the next week or so. Amazing TR1 from Cloudcoco today, with somebody going in at 15%, which seems to be very keen. Amazing that the shares haven't actually risen that much on the news. People are rather sleepy at the moment in the market for some reason, but the opportunities are still there. End of day close through, I suppose, the 1.35 level, and that's where the around where the 200-day moving average is, should be enough to get the shares up towards, or start the journey towards the top of the range, up to 2 pence, maybe by some time in November. Stop loss back below 1.1 pence, but obviously if somebody's going in there with 15%, you would have thought that the shares should be on their way. Onto a stock which I know has a lot of fans who've been very, very patient in the recent past, Emmerson. Here we've got a rising trend channel which has been in place since the beginning of last year. Shares bouncing off that channel once again. It's rather surprising that they've needed to do that, but 5.4 pence the floor of the channel, and above 5.4, looking for 7 pence initially. Big target here up to maybe 10 pence by the end of the year if things that are supposed to be happening start happening. On to Landore, which I know has a lot of supporters as well, and that's partly the reason I'm including it in the selection today. Here, a nice rebound off that resistance line, or support line there from earlier last year. Multiple tests of that level around 22 pence, and above 22 pence we're looking for the 200-day moving average at 30 pence, perhaps by the end of next month, or maybe even sooner. The big picture, obviously, is to look for 40 pence plus maybe by the end of the year, but at this stage, let's just go for 30 pence at the 200-day moving average after that resistance line break from April, which looks quite healthy if we can close above 24 pence on a weekly close basis. One of my stocks of the year was Mode, and I suppose I've already had the rise from near to 40p, well, near 40p, which is when it was talked about, up to as high as 80 pence at one point. Disappointing that the shares are actually back near the where they were at the beginning of the year, or turn of the year, but looking interesting now in the sense that yesterday we saw the shares go down to 33.75 versus that, I think that's an all-time low there at 34 pence. That's a bear trap rebound and one of the favourite technical signals there. Also very good bullish divergence going into the last decline from 45 pence at the beginning of the month. So RSI not actually going any lower, which can be a sign of a decent recovery on its way. But I'll be looking for at least the 50-day moving average area in September, resistance around 45 pence initially. And I think that would be a rather better look for the Mode chart over the near term, maybe the next couple of weeks. Another stock where there's been bullish divergence and also director share buying, I think 55 grand's worth by the CEO here, Naheed Memon, at what I think is around the 30.31 pence level rather, but going down from July, we've seen the RSI trace have actually higher support points there, so it does look as though there's decent bullish divergence there and perhaps positive momentum coming into the stock. Still looking for 0.4, 0.45 as the near-term target for the shares. Maybe that could be seen by the end of next month while we hold above 0.3 pence. So looking rather better or increasingly better for Oracle given or in the wake of the director share buying. One of the stocks of the year in terms of being followed on Vox has been Polarean, and not surprising really given the wonderful rising price or trend channel that we have on the daily chart. Here we've got a trend channel heading towards £1.30, and while we're above or a break of the old 99 £1 resistance, should take the shares up to that level maybe by the end of next month. So above 99 pence, let's call it, up to £1.30 on Polarean over the near term. Not often that the mainstream media comes up with a cracker, but this has been a cracker for quite a while. Serica Energy, even before the gas crisis that we have at the moment, been a very strong situation. And current position is that we've got a near-term target here, perhaps up to the top of that trend channel from back in, let's get that, back in May, up towards the £2.30 level. But the big picture target here, maybe over the next 6 months or so, the top of that rising trend channel from 2018 as high as £3. So break of 230 could take us up to £3 on Serica. Stop loss at the moment probably just back below, or an end of day close back below the latest gap to the upside around £1.90. So above £1.90 up to 230 and then up to £3 for Serica. Not the type of stock I normally look at, but great write-up in the Times, and that seems to have sparked yet further interest. On to a stock which I can't actually remember looking at all before, which is Tintra. Here we've got a rather illiquid looking base on the daily chart for the shares, but they're currently looking for, I suppose, a target towards the £1.40 area while we hold above the, I suppose, the upper 70s at the moment. So rising trend channel like that, and above that, looking for above the upper 70s, looking for £1.40. Perhaps by the end of the year. Support has come in over the last couple of weeks above the 50-day moving average, which tends to be a pretty strong signal. A couple of stocks to go now. One is one that I actually missed this morning, which I was rather disappointed with its world-class asset. Here we've got a situation with Touchstone exploration gapping through recent resistance around the 95 pence level. I have to say, though, I think I covered the stock before when it broke that line of resistance there from February, which sort of makes up for it. That was in the low 80s, and we've been tracking sideways until today's gap higher. A break of or an end-of-day close above the 200-day moving average at £1.13 should be enough to take the shares up to that gap down that we had at the end of March around the £1.30 level, perhaps by the end of next month. Finishing off with United Oil and Gas, which has been, I suppose, slightly disappointing and frustrating over the recent past. Here we've got a situation where the shares, I think the RSI here around the, it was around the 12 out of 100 level yesterday, around 12.13 at the moment out of 100, which is the most it has been oversold for quite some time. The last time it was as oversold as this was in March last year, and the shares were at 1p and they went to 6p. And previously to that, there was a rebound up from 3 to 4 or 3.5, let's call it. And then the big rally here back in 2016 when we were really oversold. Shares were around 2.5 pence and they then rallied to 6 pence. So looking for a pretty big rebound here for United Oil and Gas. I know the interims are coming up on Tuesday, so let's see if we can fill that last gap down towards 3.3, 3.4 pence over the near term. But being so oversold for so long, it does appear that there's a technical opportunity there at United Oil and Gas. So let's wait and see. That's it for me today. More updates over the weekend.